Welcome to the Inspire to Invest podcast, where we're sharing stories from real estate investors and how investing has changed their lives. This episode of the Inspire to Invest podcast has been brought to you by Fluent Capital. Hey, welcome to the Inspire to Invest podcast. I have a great guest today named Michael Ponte. And if you're not familiar with him, he is the founder of the Savvy Investor, as you can see, as well as a company called Propsperity Investments. This is a real estate investing company that he founded back in 2002. He focuses on both commercial and residential real estate and currently manages an investment portfolio of more than 235 units and a value north of $30 million. Across various markets in Canada. So thank you so much for being here today, Michael. How are you?
It's great. My pleasure. Thanks for having me on, Serena. This is just wonderful. So I've been watching your podcast quite a bit. And like I said, it's been wonderful and an honor to be part of it. So thank you.
Awesome. I appreciate that. So obviously you've built quite a big business over the last 20-ish years. Maybe you can take us back to what life looked like before real estate came into your life.
You weren't supposed to say 20 years, by the way. I'm just joking. So before real estate, you know what? I would imagine it's very similar to what a lot of other people were kind of going through as well, or are currently dealing with right now. You know, working your job, you know, just putting in the 9 to 5. And so for me, I started many moons ago. And, you know, I think I kind of shared a little bit just at the very beginning of this before we jumped on live. But for me, I just wanted to own a piece of real estate. I didn't really have no intention, you know, being in a podcast like this with yourselves or starting up Savvy Investor. That wasn't the intent. Yeah. And so I was working for a pretty large organization. I was in a very high level position with a food manufacturing company. And with that being said, I was working like a dog, you know, kind of getting into the office at like 6:30 in the morning, leaving at 6:30, kind of coming home and doing all that stuff. And it was really draining. Okay. And I'm sure a lot of people can feel that way, especially in this day and age right now. Yeah. And so I wasn't happy with the returns in my investments, being mutual funds or stocks. No offense to them. It just wasn't the right fit for me. But the one thing I did notice is my personal residence values were going up quite a bit. And I'm like, if I do more of this and less of this, maybe it would be better for me. And that's kind of where my journey kind of started, right? And started buying just a couple pieces of real estate for myself. And then it just kind of grew from there, right? And so, like a lot of people here are doing this right now. They may just want to look at improving their financial future or building an expansion of their pension or whatever it is. And that was the same vision for myself. I just saw this as an opportunity. In fact, my first property was losing $40 a month. I still want clearly, right? And it wasn't the $40 because I didn't really know what the hell I was doing to be back then, but it was just really, I saw this as an opportunity to add more assets to my net worth. That's what it was.
So. Yeah, I think everyone gets started in their own way. I mean, I started with a short-term rental in Florida that I bought when the dollar was at par. And cool. Your point, it wasn't cash flowing at all. So I actually paid it off with just money from my business. But I knew the US dollar is obviously going to bounce back. And that's really where I was going to make most of my money, a little bit on the market as well. But it was probably break even or even like maybe even a loss a couple of years in a row. So you kind of get started where you're at and then you just start to learn and develop and grow. But to your point, even about the stock market, like I think there's a couple things there that I've never really been comfortable with. One is a lack of control. Like it could be raining, there could be a war, there could be who knows what. And then all of a sudden, you know, things are going everywhere, right? So there's a lack of control that you have, but also you only have the value of like what you kind of put into it. And with real estate, you put 10% down or 20% down, but it's on something that's worth 10 times that. So obviously 100%. There's just so much more opportunity just from economies of scale and stuff like that. Now, I guess when you did look at that, so what really kind of pushed you over into real estate? So you obviously talked about your job and you talked about why you wanted to do it, but was there someone that said to you like, hey, you should consider this, or did you just kind of come to that on your own?
Yeah, it was more on my own. The big aha moment, and it kind of goes right back to what I said, is, you know, I started back in 2001. And prior to that, real estate prices weren't going up that much. And so a lot of people don't know this because this is going back over 20 years ago, right? So, but shortly after that, the market started to kind of not the insanity that it's been over the last 15 years. But it started to go up. And with that, and my first property was in Edmonton of all places, and I'm based in Vancouver. And I just bought this small little townhouse. That's all it was. And I've shared this story in other podcasts before. But I bought this little townhouse losing $40 a month. But it didn't take long, like within about a year and a half, where I was able to significantly increase the rent of that property because the
Yeah.
value, because the rent demand was higher.
Yeah.
But guess what happened, Serena, was that negative cash flow turned into positive cash flow. Okay. Now, there isn't stuff like we're seeing today. Like, you're here, we are in a podcast, hopefully supporting other real estate investors. Back then, there was not a lot of information about,
Yeah.
anything to do with real estate investing. So, we were kind of doing this a little bit blind, trying to figure
Yeah.
it out. But it was truly my aha moment. I'm like, wait a minute, I'm not dishing out $40 anymore. I'm now putting in like $300-400 in my pocket every single month.
Yeah.
And that's when the light bulbs kind of came on. It's just like, wait a minute, if I bought a few more of these,
Yeah.
yes, maybe there's something to it, right? And that's kind of where that really opened my eyes to this. And
Yeah.
again, for me, it was just there wasn't a lot of understanding back then, and I was going blind. But then it came to the realization that this can actually drive some capital in and put money in our pockets.
Yeah.
And then with that being said, if I continue to expand and grow and buy more properties, could I
Yeah.
maybe, do this as a job? And that kind of was my aha moment for me back then.
Yeah.
And so, again, going into very, very blind, but that's really was the pivotal time. And I think it was like 1 or 2 months after the fact of that it just really came to the conclusion. I remember
Yeah.
talking to my wife. I'm like, listen, remember that property we bought that we lose? What if we bought a few more? And that's exactly
Yeah.
what we did. We bought a few more after that.
So then
And
how
then
long did it
slow.
take then to make that jump from, working that corporate job? Like how many properties did you have before you ended up retiring technically from the
Yeah,
corporate world?
it's a great question. Very good question. And the magic number, okay? But I don't want you guys to write this down, just to be very, very clear, because there's a further part to this story.
Yeah.
But I left my corporate job in 2007, and that
Okay.
magic number at that time was, I think, 12 properties or 10 or 12 properties, and I don't really remember it
And they're
exactly.
all single family, or had you moved into multifamily at
And
this point?
they were all single family properties.
Yeah.
So part of what I was sharing earlier is working like crazy. And then at the same time, I'd come home, gobble up some dinner, kiss the kids goodnight, and then start my second job, which was obviously real estate investing, right?
Yeah.
And so with that being said, I started to learn about partnerships and stuff like that, and then joint venture partnerships, and started to integrate this. And so
Yeah.
that started to kind of happen. So I had a great discussion with my wife and said, listen, this is insanity. I can't do
Yeah.
this like forever. So the kids were very, very young. And we took I really just said, listen, we have an opportunity here to take a little bit of a leap of faith and try to go for it. This is the type of capital we're producing. Yes, it's
Yeah.
not offsetting a lot of the income that I had when I started, but if I continue to grow it and expand it, we can do this.
Yeah.
And we had a buffer. We were very fortunate position where we had a buffer to kind of support it and give it a shot.
Yeah.
But as I shared with you, when I left my corporate job was late 2007.
Yeah.
Okay. I don't know if you remember or if anybody remembers what the following year happened,
Yeah.
right? And so let's
Yeah.
just say not the best time to lose or the best time to quit your job or, at
Yeah.
2008. And
Yeah.
so with that being said, it's one of those ones that it was kind of an eye-opening experience. And obviously the lessons that I learned back then is significant,
Yeah.
which is probably similar to what a lot of lessons people are learning today.
Yeah.
But it really set the tone for myself for my career.
Yeah.
That was a very pivotal time
Yeah.
because with all the challenges that occurred back then was some of my biggest opportunities too. That's where I really scaled my business, but
Yeah.
it came with a lot of pain. But
Yeah.
truthfully, it was about wanting to do anything I possibly can to ensure I took care of my family, and
Yeah.
this
Well,
is
your survival skills
that's
kick in. You're like, I got to do what I got
completely,
to do,
yeah.
right?
And that's it. So, I go back to it and I'm like, listen, guys, this is my story.
Yeah.
If I can share one thing is just be aware of this, and we'll maybe talk about this after, is about
Yeah.
making that transition and what you should do kind of before you do that.
Yeah.
But don't go all in with
Yeah.
not a real good clarity of a plan. And I thought I had a reasonable plan, but guess what? Something happened. And believe it
Yeah.
or not, look what's happened over the last 5 years. And it's
Yeah.
been insanity. And so you got to be prepared to make that leap. And more importantly, is you got to have all your kind of ducks in a row.
Yeah.
I thought I kind of did, but it really wasn't. And so
Yeah.
that was a real big change for us. Even though we made that transition then, it was really, really tough. It was
Yeah.
very, very tough.
So I guess to that point, what would be some of those lessons? Like, what would you say was the hardest
Yeah.
thing you went through during that time?
Well, I think, the biggest one for us is in 2008, we saw a lot of the rents going down, actually, the opposite. So all that cash flow that we were kind of generating from these properties.
And also depending on now.
Yeah. And depending on now is gone bye-bye, right? My wife was
Yeah.
at home managing the kids. That was
Yeah.
her job. And then here I am unemployed and technically doing this as a career.
Yeah.
Um, so it's all about being creative in our approach to this, is looking at all the income streams that we were able to generate. And so with
Yeah.
that being said, our number one was specifically cash flow. And so with that being said, we really had to get a better understanding of our business a little bit more effectively here.
Yeah.
So the fortunate part during that time was, even though the cash flow was going down quite drastically, we had to pivot, we had to adjust, we had to be creative, we had to look at multiple different ways, and this could be very similar to a lot of people that hopefully resonates a little bit with people as well. As if
Yeah.
this is the only focus that you are, is just based on cash flow, and rents are going down, values are going down, don't bury your head in the sand. You gotta go into fight or flight mode in some cases, because this is your business at the end of the day, and you got to really manage through this.
Yeah.
And so with that being said, we had to kind of restructure the way we looked at our business completely, is not just focusing on the joint venturing or just on the cash flow side, because it isn't a sustainable business. And so
Yeah.
now we had to add things to our agreements with our partners in regards to acquisition fees and disposition fees. And I know people do
Yeah.
things a little bit differently. I'm not going to spend too much time talking about this,
Yeah.
but we have a business that we need to run, and it can't always just be focused on that. So
Yeah.
we had to also take into account that it had to always make sure that it was maintaining profitability for all parties involved.
Yeah.
Now, with the negative cash flow side also came opportunities, as you're probably well aware, which is what we're seeing even in some cases today.
Yeah.
Is we were getting properties at a significant discount back then too. And so
Yeah.
as 2008 was a struggle, 2009 and 2010 was when we did our largest acquisition pools. Like, we were buying properties, and this is not a joke, probably 1 to 2 properties a month. Like, we were going, like, I was literally living at the lawyer's office signing papers. I'm like, just give me a desk and let's do this. And so we were in full acquisition mode. So during that time of challenge of cash flow was actually when the opportunities became available to us, because we found a big, obviously lots of discounts. We buying stuff, back in the days, it was like 67, 58 a door.
Yeah.
We started to transition at that point in time into multifamily.
Yeah.
And it didn't take long before the prices just went up drastically. And that really was kind of the boom, right? But during those challenging times, those big lessons there was opportunities, but just like anything is, you have to kind of adjust. You have to look at your business sometimes differently. And I know sometimes this is not taught very well out there, is a lot of people just think it's just cash flow. It isn't. There's so much more to it than that, right?
Yeah.
So.
Now, at what point did you start engaging other investors to scale your portfolio? Was it right after the first property that you purchased, or was it a few down the line? And how did you
it
go
was a
about
few
that? Because they weren't, social media wasn't even in existence yet. So how did you go about that?
Now you are aging me. Look at that, right? No, I'm just joking. But no, truthfully, it's a great question, and I didn't have the right answer at first. It's just kind of like, for me, I started at about property, I think it was number 5, and I do, again, maybe a little amnesia or something like that going on here, but I think maybe 4 or 5 properties at that point in time. But then what happened is, like, again, there's not a community like this, or like, based on podcast or Savvy Investor or other groups or whatever it is.
Yeah.
And 5 properties in our space, it's still very good, but you've seen people doing, hundreds of deals and stuff like that. But a lot of people forget, in the general public, when you've got 2 or 3 investment properties, that is like crazy. Like, they just can't even fathom, because they don't understand how you are able to even do that.
Yeah.
And so when you were saying, when you have your general discussion with people, hey, how are things going? Things are great. I just bought another investment property. You did what?
Yeah.
It's just like, what?
I did
And
it.
now how did you do that, right? And so now they're just like, well, the common thing you hear is, well, you know what? I'm interested too. Maybe we can do something together. So next time you find a deal, let me know.
Yeah.
And that's where I was like, huh.
Yeah.
What does that look like?
Yeah.
I don't know what it looks like. I have no idea what that looks like. And so now all of a sudden we've got partnerships just kind of coming out of the woodwork. And
Yeah.
most of those individuals are like friends and family to
Yeah, of
begin
course. They're
with.
just happening
And
organically.
it just, yeah, very much so. And so with that, that's where it happened. And so as friends and family at this point in time, started partnering up, made a lot of mistakes at the very, very beginning and structures and all sorts of stuff.
Yeah.
But again, even myself, I was getting it to a point where the banks were saying, Mike, kind of getting cut
You're
off
limited.
here with how many properties you have. And I hate, and I shared this a lot, is I hate when the
Yeah.
banks do that, but it's just the natural order. They're the
Yeah.
ones that make the rules. You have to
Yeah.
follow their rules. Unfortunately, they got all the money, right? So, but then this is where it opened the doors. Now is just like, I'm literally unlimited. I can go to whatever level that I want because I've
Yeah.
learned how to raise capital.
Yeah.
And so with that being said, that's where it started. It started kind of number 5 and then started to kind of push myself out. And from that point forward, it's pretty much mostly what I do. Like, I'll be refinancing properties. I'll sell a few properties here and there. And don't get me wrong. Now, my portfolio continues to expand because I believe in this. I believe in this space and investment strategy. So when I've got capital, I'm reinvesting it back into my own personal assets as well. And that's actually part of my long-term plan too, which I'm sure we'll probably talk about at the end of the
that
day,
makes
right?
perfect
So,
sense. Now, I know you talked about the challenges that kind of came along with 2008, but is there anything in particular that stands out to you as one of the biggest obstacles that you've faced so far?
Yeah, I think the biggest one, well, there's been so many. It's a separate podcast in itself. Like, I think the biggest one that we had, and it may be, I'm trying to even think the best one. Actually, it wasn't 2008. That might shock you. Okay. And it was 2016. That was probably one of the toughest times. And this is basically specifically in our portfolio in Alberta. And for those that have been in that market in 2016, 2015, somewhere in that vicinity, they totally get it. Okay. It was significantly worse than 2008. And what people are dealing with right now, this is nothing. Like, this is nothing compared to what we were dealing with, to be very, very frank. Okay. And so back in 2016, for a lot of people that don't know, Saudi Arabia just opened up the taps of oil, right? And that was one of obviously its main industries. Oil in Alberta was just under absolute attack, still is in some cases. But we were seeing, instead of people moving into the province, we saw mass exodus out of the province, like mass exodus. Everybody was leaving. And then all of a sudden, we saw prices going down on all of our properties. And to add insult to injury, we saw a lot of people leaving, and the rental demand was the vacancy was just significant. Like, it was absolutely through the roof. And so, to put it into perspective, I think it was probably closer to around 8-9%. It was high. Like, it was very, very high. And so, very similar to kind of what I said, it's like, you know what, we've had to deal with challenges 2008. And now we're dealing with challenges in 2016.
Yeah.
You can't bury your head in the sand. You had to constantly be pivoting and adjusting and being creative versus everybody else. So even though we were seeing kind of a mass exodus of people, how do we keep rent going into our portfolio to maintain a lot of the expenses and everything that's going on? And this probably resonates well with a lot of people today. But again, this is it. It's just like, what do? We've got a specific amount of capital that we need to maintain to cover off all these expenses and everything. We've got partners that we got to report to, and things aren't maybe necessarily going that great. And so what are we going to do? And that's what, for a lot of partners, that's what they want to hear, is they want to hear kind of what the plan is. They understand challenges happen. It's
well, I think it goes to
everywhere.
your integrity to have transparency and to be proactive with this communication, right? Like, you can't just
100%.
ignore the emails coming through and ignore what's happening in the world, right?
Exactly. Like, that's the thing. When you're dealing with partners, they are your partner, and be very, very clear. And to pretend it's not happening is really doing a disservice to you and obviously your partner as well. And so the open lines of communication and transparency is one of the most important things whenever you go down the road about capital raising with individuals. So, like I said, for me, that was a big one. And what it did do is it forced us to be much more efficient in systemization of multitude of different things, very responsive in regards to, so if tenants are responding to ads, we were, back then, we wait a few hours or like 6-8 hours to respond, where we had to set up systems where the turnaround was like minutes. And so we were capturing it
so fast.
Yeah, I was capturing it fast, scheduling it fast. And so, and just being very, very creative in regards to attracting that quality individual too.
Yeah.
So we had to even change kind of our whole platform that we kind of had to work with. We actually brought a lot of our advertising in-house, so we had a lot more control.
Yeah.
But again, that was a negative, but it has now helped our business significantly because we've had to change and pivot. Now our vacancy is pretty much almost non-existent. It's like, and that's across the board. And so we know that we've done the right things, but it's during times of challenge is when very unique ideas and creativity really starts to kind of come in. And this is the one bit of advice I can give to people, especially during right now, is be proactive. Be proactive in all of the negativity that may be happening right now.
Yeah, no, I think that's perfect. And on that note, we're just going to stop for a really brief break from our sponsors, and we'll be right back. Inspired to Invest is proud to support the Beyond Success program. In today's complex world, it's absolutely crucial for our youth to learn how to take charge of their financial future. We believe that every young person deserves access to accurate, practical financial information. Designed to bridge the gap, the Beyond Success program leverages a comprehensive educational bootcamp to equip young minds with essential financial literacy skills. At Beyond Success, it's not just about teaching financial literacy, it's also about fostering a foundation for a prosperous and empowered future. Join us. Together we can build a brighter financial future for the next generations. Join us. Together we can build a brighter financial future for the next generations.
We are so excited to announce the launch of Fluent Capital, a competitive investment and lending solution to all of our clients. We're providing competitive investment rates as well as alternative lending options for first and second mortgages.
Our mission is preservation of capital through rigorous underwriting processes to ensure we preserve your investment.
So what makes Fluent different from other investment firms?
We have a low fee structure with full transparency. Our investors receive the interest income as well as all the other fees that we charge to our borrowers. That includes administration fees, renewal fees, discharge fees, and origination fees. At Fluent Capital, we're all about risk management and preservation of your capital. Fluent Capital, we speak your language.
I value transparency, integrity, and trust. If you choose to work with me, you can be assured that business will be conducted honestly and openly. Time is of the essence in this industry, so you can expect nothing short of quick, clear communication from me. I'll keep you informed every step of the way so you feel comfortable throughout this entire process. Our homes are where we eat, sleep, relax, and play. My clients' best interests are at the heart of everything I do. And with this said, my service to you doesn't end when the transaction does. As your realtor, I'll not only help you buy and sell your property, I'll also educate and support you along the way. I want to help you fulfill your goal of home ownership and become your trusted real estate resource for life. I can't wait to share my passion for real estate with you. More importantly, to find you the perfect house to turn into your home. Looking to buy, sell, or invest in Durham Region or Toronto? Let's chat. Hey everybody, welcome back to Inspired to Invest. I have Michael Ponte here from Savvy Investor and Propsperity Investments. He's talking about his journey as a real estate investor over the past 20 years. And we're obviously talking about the challenges and obstacles that you faced not only in 2008, but also in 2016. What I want to know as well is, what are you most proud of? So what would you define as maybe one of your biggest successes?
Yeah, and it's not going to have to do anything with real estate, actually. I think it might shock
That's
you. But,
okay.
yeah. So honestly, with the success, well, I shouldn't say it has nothing to do with real estate. It actually has everything to do with real estate. But one of my goals, and what I first wanted to get into real estate is, everybody hears about, understanding your why. It's a little cliche out there, but at the end of the day, it's the truth.
Yeah.
And for me, it was about spending time with my family. That was the most important part for me, be able to drive my kids to school, pick them up, go to their activities. I want to be more involved in their day-to-day stuff.
Yeah.
That was the priority. And for me, that was my success, is being able to break away, run it as a business, and being able to do the things that I wanted to do is free up my time. Now, don't get me wrong, I work hard, but I choose my hours. I don't have to be forced to do whatever I want. And honestly, that is my biggest success. And, it was very rewarding, and I've done lots of trips before, but not to an extent like we did last year. We were in Portugal for almost a month. And so
Nice.
with that being said, it was kind of a test in a lot of ways. Is like, you really want to test your systems? Let's see how it goes, right?
Yeah.
Is you walk away and then you let your team do it. And, you're dealing with almost a 12-hour time change. It was, I'm waking up, they're going to bed. They're going to bed, we're waking up. It's one of those
those
things.
were actually the vacations that I liked the most, because I actually had my own business for 18 years and I kind of liked not being accessible. So I got married in Thailand, for example. I was gone for a month. So when they were, I'm waking up, they're going to sleep. So you can kind of check your emails and know that nobody's going to email you all day long. But it was the biggest test to know that my business is actually running without me. I'd still check in. I would still have to like hit accept to process payroll and stuff like that. But I think it's definitely like the best indication of the strength of your business.
100%. But that, exactly to your point, is like, it's one of those things. I really enjoyed that holiday for exactly the things that you did, you referenced. It's because, you know what? It's simple, like checkpoints. I would check early in the morning, at the end, late in the afternoon. Boom, boom, and that was the end of it. Everybody knew exactly where I was. There was nothing urgent. They all knew systemization, what they needed to do. They all had a specific authorization to approve things that needed to be done. It was really, really simple. So the only thing that was being, that they would bug me for is anything maybe significant, which there was very little at that point in time. But that really bodes well to kind of, when we talk about real estate investing and trying to create a little bit of, and I don't know if I really like the term financial freedom.
Yeah. But it's really what it is. I mean, I had another question, but we're talking about it now. So we'll just kind of go through it. It's just, it's not like someone necessarily wants to be a landlord so badly, or like just for what it is. It's more of the things that come along with it, whether that's your return on time, the flexibility, like it's all of those just things that can change your life just based on the fact that it's on your own terms.
That's the truth of it, right? And that's honestly the truth. And we got to be really clear. This is still a business. I don't like the term passive investor. The only way you're a passive investor is if you're one of my partners. But truthfully, as a real estate investor, you are running a business. So it always comes back here, right? It falls right here. But once you've got the right systems in place, you're not necessarily needing to work 40 to 60 hours. Maybe it's like 10, right? But it takes time to kind of get to that specific level. And, I'm kind of at that stage right now. I've been doing this as long as I've been doing it for, we've got all the right systems. Things are working out accordingly. And so with that being said, I've learned so much over like challenging times. Now you look at what's kind of happening now. It's like, oh, well, just another one. It's just another
ebb and flow, right?
Another day in the game of real estate investing, right? And so what did we do back then? Let's do that all over again, right? And it's kind of just what it is. But honestly, we're kind of, my kids are now graduated high school, going to university and stuff. It's quite rewarding now that all of a sudden that time freedom is becoming much more pronounced, and it's given us so much more flexibility in our lives. And that's what we've all worked so hard for, to get to that specific point. So that is truly one of my success stories, is that. And like I said, don't get me wrong, I've had a lot of success stories in my real estate journey, but for the biggest one, that's it. It's the time back, or not. It's the time to do the things that I kind of want to do. I can, go on a podcast like right now and not necessarily need to worry about it. It's all of that stuff that really comes along. That's why I got into it in the first place. And it's just coming to fruition, which is wonderful, right? So.
No, that makes perfect sense to me. So I guess just going back to, your journey over the last 20 years, what would you say is the craziest thing that's happened? I know you talked about, some of these economic impacts, but when you look at actually, the nitty gritty stuff, is there anything that pops out?
Yeah, there is. There's probably the biggest one. It still haunts me back in my early days. Like now I just kind of brush stuff off, but it was probably earlier on, and this probably will resonate with a lot of people. Now, nothing surprises me, but when I first started, you're just like, you're living in kind of la la land. You're just like, I'm gonna buy an investment property. There's going to be cash flow. Tenants are going to take care of it. It's all this stuff. And I've shared this story before with lots of other people. So again, if you hear it again, you can hear one more time. But this is my big shocking one. So it was kind of my, I think it was my second or third property. I wish I can remember which one it was. Hired a property manager, brought this person on, and I thought he was going to be good and all this stuff like that. The property was in Edmonton. I'm based in Vancouver. And guess what? Everything seemed tickety-boo. Everything was great. It's just like rent's coming in every single month, and it's just like money's going in my pocket, all this stuff. And I didn't go out to see the property for about probably a little bit over a year and a half. I haven't been out to Edmonton in a long time. Had no real need to because, I just didn't need to. Everything seemed to be working great.
Yeah.
And made the trip, got out there. I'm like, property manager, I want to go see all of our properties. Let's do a quick inspection of everything and see what happens, right? And so walked into our first property of the day and knocked on the door and introduced myself. I'm the owner of the property. Pleasure to meet you. And I knew trouble was afoot when the property manager introduced himself for the first time to the tenant as well. And I'm like, okay, that's really odd. So, but then as they opened the door, it was like an absolute punch in the face, like just pow, like just the smell that was coming out of this house was, I can't even describe how bad it was. But yeah, so if you can imagine an episode of Hoarders, that was pretty much it, right? And so it was absolutely clothes and stuff everywhere. It was an absolute disaster.
Yeah.
And so you're kind of walking through the unit in disgust, and then, but you couldn't pinpoint where that smell was coming from. And this was just a small little townhouse, tiny little thing.
Yeah.
And we went down to the basement, and all of a sudden everything became clear. And they were running a puppy mill in the basement of this townhouse, right? But the damage that was there was just absolutely significant.
Yeah.
So literally at the moment we walked out the door, I fired the property manager instantly, absolutely instantly. And I come back, after I kind of cooled down after a little while, it really wasn't his fault. It is his fault.
Yeah.
But the real fault
was the expectation for him to go by the properties? Like, was he supposed to be doing spot checks like monthly, quarterly?
Well, here we go. So this is the lesson learned. I take responsibility for this. It was actually my fault that this situation happened. Number one, I wasn't actually out there doing inspections of the property on a more consistent basis. So that's my fault. But at the same time, I wasn't holding my team accountable for the things that needed to be done. At the very least, they should be seeing their properties every 6 months. Okay. So, like I said, has there been situations of other challenges that maybe were worse than that? Yeah, there is. I've learned a lot of stuff. That's why nothing surprises me.
Yeah.
But what most memorable was something like that. And the biggest reason why I say that is you have to manage your team. You got to take ownership of everything that you're referencing. So, it was a big aha moment of this business that we called real estate investing. And the key word is business. And so with that being said, you've got a team, you've got a group of individuals that are supposed to help manage this on your behalf.
Yeah.
You got to make sure you're holding them accountable, but you got to also be accountable as well to the asset there by making sure you're doing your spot checks on an ongoing basis. So that was a big lesson. Like like I said, the lesson in that one was probably about $20,000, like in regards to damage.
Now, did you
and repair
evict the tenant right after that, after you saw it, or what was your next step beyond?
Yeah, so that happened pretty much immediately too. So we evicted the tenant, and we just kind of went with a pet policy right off the bat, and just overall damages, and just based on the market that we were in, we had lots of flexibility. Yeah, this pet, unless you want to start charging pet fees of an extra $50 a month, but it's kind of a done deal, right? And so that was a big lesson because, we could have caught a lot of this stuff earlier on. And again, it goes back to systemization. It was a lesson that I learned, and it just improves the way we do things now much more proficiently. So now, even when we go and get a new property or buy a new property or bring in a new tenant, the inspection doesn't wait. So if they move in today, the inspection doesn't happen 6 months later. It actually happens roughly around 2.5 to 3 months because you know what? You can start to see a pattern starting to kind of occur earlier on, and you can catch it really, really quickly. And we communicate to the tenants. So if they're wanting to, in advance, and say, listen, just so you know, we'll be doing inspections on a regular basis, and just to catch them. So tenants don't like that in a lot of ways because, or problematic tenants don't like that. I should say that. Okay. So anyway, that was kind of a big lesson. Most memorable lesson. How's that sound?
Yeah, I can understand that. It's nothing like a smell to really take you into something.
Totally.
So obviously you built a pretty substantial portfolio through your different partnerships and stuff like that. What would you say is next for you? Do you have a plan to grow your portfolio to a certain size or go into a different market or anything like that? Yeah,
absolutely. And kind of a combination of both. I don't really like the door count for anything. For me, I love the game now. I'm kind of at a point where it's not such a, I'm not needing to buy 100 doors a day or whatever. Some people are very ambitious in regards to owning a million doors. I wish them all the best, to be honest with you. I like my life nice and simple, to be frank. And so for me, it's about finding the right deal that makes the most fundamental sense. And it's not a deal, and I don't need to be buying a deal tomorrow. But I am very, very picky in the deals that I'm positioning now. And so if it doesn't make our partners money, and I'm going to be a little bit selfish, me money, I'm not doing it. It's that easy. I just don't have the time and energy to focus on stuff that is just not going to work based on some key criteria that we tend to look at. So right now, we are expanding. We are continuing to grow. I don't ever see that changing. We got properties that we'll be selling. We got properties that we're going to be buying. We're kind of at that stage where we're doing some rotation. I've been doing this a long time too, where we kind of repurpose a lot of the cash and capital that we have from our existing partners out there. So it works really, really well. And then in regards to some different markets, like for us, believe it or not, we are very bullish in Calgary and Edmonton. Those are the two markets. We've been in those markets for a long time, but we like seeing the trends that we're seeing there. It's crazy because we haven't seen some of this stuff in a very, very long time. That's that one. Secondly, and I haven't really shared this. This is maybe the first time I'm actually sharing this, but we are maybe looking at expanding and looking at different markets completely. And that's actually in Europe. And Portugal is actually one of our first spots. I am Portuguese. So with that being said, I'm just waiting for my dual citizenship to hit. But once I do, it's part of kind of our long-term plan where we at some point in time will be able to, instead of snowbirding down to Arizona or Florida,
go to Portugal.
I think I like Europe a little bit better, and that's just me, right? And so that's kind of part of our plan, is that we would like to start kind of maybe snowbirding there for 6 months and then going back and forth and being able to manage our business equally. Obviously we got home base here is with our family and stuff like that, but part of our vision for our life is to do a lot more traveling. And so with that being said, having kind of a portfolio, or at least getting started out that way too, also gives us an opportunity to be much more visible to other markets other than just here in North America as well. So
no, I love that. Now, obviously the name of the podcast is Inspired to Invest. So are there any quotes that really motivate or inspire you?
Yeah, great one, actually. And it's one, I actually have it on my phone, and it's going to sound kind of strange, but I'll just read it. Stop playing small, show up and be seen. And that may sound like it's a business quote, and it can be, but when the reference is stop playing small and showing up and being seen, it's in everything in your life. And so to me, that where it resonates is be present, be big in everything that you do. Anything that you have your heart associated with this, be big in your approach to this, and be seen, be visible to that, be visible to your family, be visible to your colleagues, be visible to your peers, be visible to your friends. That to me was a big one. And then obviously from a business perspective, believe in yourself, and at the same time, just continue to grow and do the things that you want. So that's one that stayed with me for literally years. It's literally on my homepage on my phone. And it's just about constantly trying to be visible out there in all aspects of your life. So
no, I love that. Now, is there anything in particular that you wanted to leave with anyone that could be watching or listening right now?
Sure. I think for a lot of people is, for the challenges that a lot of people are facing right now is, honestly, this is just yet part of the cycle. And it really, really is. This is myself talking, and if you talk to a lot of people that have been doing this a long, long time, been there, done that, they've seen this stuff before. The important part is everybody will get through this. It might be having some challenges, but more importantly is just take the time to look for options, talk to people, engage with other people that have been doing this a long time. Educate yourself, like even this podcast as well that Serena's put together. I'm sure she's had some amazing guest speakers to share some of their words of wisdom to help support them. But the more knowledge you can get, the more advice, the more engagement, the more involved you get in your business, it will help you go through some of these turbulent times. And more importantly is as you stay the course and continue to go forward, it will help the way you manage your business moving forward, and it will help you be much more successful over the long term. I can't tell you all the challenging times that I've had to go through over my career as a real estate investor, it was during those times of challenges where the leap was so significant after the fact. And I'm treating this exactly the same way. So I wish you guys all the success in the world. And more importantly is just work really, really hard, stay positive, and keep pushing forward. You'll get through this. So
Awesome. Well, I love that. And thank you so much for taking time out of your day to be here. Of course, for anyone that has enjoyed this episode, please make sure that you like, comment, and subscribe. And if you are tuning in via audio, please make sure that you leave a review as well. You can follow along on Instagram at Inspire to Invest Podcast for lots of pre-promotion, inspiration, and takeaways. And of course, remember, above all else, when you invest in yourself, the sky's the limit.
Thanks again to Fluent Capital for bringing you this episode of Inspire to Invest. The views represented on this podcast are for general information only and does not constitute investment or other professional advice or an offering of securities. The host and guests featured on Inspire to Invest make no representations as to the performance of any particular investment. Should you decide to make an investment, you are responsible for conducting your own review and analysis. It is recommended that you obtain independent legal, accounting, and tax advice from licensed professionals.